Do you want to make your money work for you without the risk of losing it all? What if I told you there are ways to invest with low risk and still build your wealth steadily? In today's video, we're diving into the top 5 low-risk investment options that can help you build financial security without the sleepless nights. Whether you're new to investing or just looking for safer ways to grow your money, these options can give you peace of mind while still working for your financial goals. Let's get started. 1. U.S. Treasury bills, notes, and bonds. Let's begin with one of the most secure investments you can make. U.S. Treasury securities. These are backed by the full faith and credit of the U.S. government, making them some of the safest investments available. U.S. Treasury bills, T-bills, notes, and bonds are considered low risk because they are guaranteed by the U.S. government, which has an extremely low chance of defaulting. T-bills, which are short-term securities, come in a variety of maturities, from a few weeks to a year, giving you flexibility in your investment choices. Treasury notes, on the other hand, have a slightly longer-term commitment, ranging from 2 to 10 years, while Treasury bonds stretch all the way to 30 years. The beauty of these investments lies in their predictable and steady returns. They also offer liquidity, meaning you can sell them at any time if you need access to your cash. One thing to keep in mind with Treasury bonds is that longer-term bonds can offer slightly higher returns, but they also come with a bit more risk than shorter-duration securities. However, all Treasury securities are still considered low-risk investments compared to many other options, and they're perfect if you're looking for stable, long-term returns. If you're looking to diversify your portfolio without exposing yourself to significant risk, U.S. Treasury securities are an excellent choice. While the returns may not be the highest, the security they offer makes them a reliable option for any risk-averse investor. As part of your broader strategy, they can serve as the cornerstone of your low-risk investments, offering a reliable place for your money to grow safely. 2. Series I Savings Bonds. Next up, let's discuss Series I Savings Bonds, a great low-risk option that also protects your investment from inflation. These bonds are designed to keep your money growing at a rate that matches inflation, ensuring that your investment doesn't lose purchasing power over time. Series I bonds offer a fixed interest rate plus an inflation-adjusted rate that is updated every 6 months. The best part about I bonds is that they are backed by the U.S. government, making them an extremely safe investment, and they also compound semi-annually. This means the interest you earn on the bond is added to the principal, which then earns interest itself. This compounding effect is especially powerful over time, as it helps your returns grow steadily without you having to put in extra effort. Another appealing feature of I bonds is that they are tax-deferred, meaning you don't have to pay taxes on the interest until you redeem the bonds. This makes them an ideal choice if you're looking to save for a future expense or goal, while avoiding taxes in the short term. Additionally, you can hold I bonds for up to 30 years, which gives you plenty of time for your investment to grow. However, there is a catch. You must hold the bonds for at least 1 year before redeeming them. If you decide to cash out before 5 years, you'll lose the last 3 months of interest. Even with this penalty, I bonds offer an excellent way to ensure your savings keep pace with inflation, while earning a modest but consistent return over the long term. 3. Treasury Inflation-Protected Securities, TIPS. If you're looking for an investment that guarantees protection against inflation, Treasury Inflation-Protected Securities, TIPS, are a fantastic option. TIPS are government-backed bonds that adjust the principal value based on inflation, ensuring that the purchasing power of your money stays intact no matter how inflation rises. These bonds come in 5, 10, or 30-year maturities, providing both flexibility and long-term growth. The beauty of TIPS lies in how they work. The interest rate is fixed, but the principal value of the bond increases or decreases in line with inflation. If inflation rises, so does the value of your bond, which means you're earning more interest. At the time of maturity, if inflation has caused the principal to increase, you keep the higher amount, offering a built-in safety net for your investments. TIPS offer steady interest payments that are made every 6 months, and these payments are based on the adjusted principal. This means that as inflation increases, so do your interest payments, allowing you to stay ahead of rising costs. Additionally, TIPS are taxable but are exempt from state and local taxes, which can help improve your returns. While TIPS are a bit more complex than regular Treasury securities, they provide excellent protection against inflation and can be an important part of your low-risk investment strategy. By including TIPS in your portfolio, you can make sure that your wealth grows with inflation and is protected against any economic downturns that might hurt other types of investments. 4. Fixed annuities. Next, let's talk about fixed annuities, a safe investment option that guarantees a steady stream of income for a set period or for the rest of your life. Fixed annuities are contracts sold by insurance companies where you make a lump sum payment, and in return, the insurer agrees to make regular payments to you for a specific time frame. This investment can be particularly attractive for those looking for consistent income during retirement or for medium-term financial goals. Fixed annuities offer a predictable rate of return, which makes them a great low-risk option for conservative investors. They also provide tax-deferred growth, meaning you won't pay taxes on your earnings until you start receiving the annuity payments. There are two stages to an annuity: the accumulation phase where you contribute money, and the payout phase where you start receiving payments. One important thing to consider is that inflation can erode the value of your payments over time. However, many insurers offer cost of living adjustment (COLA) riders which help keep your payments in line with rising costs. If you're planning for retirement and want steady, reliable income, fixed annuities are an excellent choice. They offer peace of mind and the security of knowing that you'll have a set income no matter what the market does, giving you financial stability in your later years. 5. High-yield savings accounts. Lastly, let's talk about high-yield savings accounts, a simple and safe way to grow your money while still keeping it liquid. These accounts are offered by banks and credit unions and generally offer interest rates that are much higher than traditional savings accounts. The best part? They're insured by the FDIC, Federal Deposit Insurance Corporation. So your deposits are protected up to $250,000. This makes high-yield savings accounts one of the safest places to park your money. High-yield savings accounts are perfect for short-term savings or emergency funds, as they provide easy access to your money while still earning interest. While the returns may not be sky-high, they offer reliable, low-risk growth for your savings. This makes them a great place to store money that you might need to access quickly but still want to earn a little interest on. Whether you're saving for an emergency, a vacation, or a big purchase, a high-yield savings account is a solid choice. The interest rates on these accounts can vary depending on market conditions, but they typically provide a modest return compared to other investments. Some high-yield accounts offer monthly compounding, which means that you'll earn interest on the interest you've already earned, helping your savings grow even faster. Over time, this compounding effect can make a significant difference in how much your money earns. Since the money is easy to access, you can use high-yield savings accounts for short-term goals or as part of your emergency fund, ensuring that you have a safety net in place without taking on any risk. This type of account is also perfect for those who want to avoid the volatility of the stock market but still want their money to work for them. And there you have it, top 5 low-risk investment options to consider in 2026. These options give you the ability to grow your wealth without worrying about losing your hard-earned money. Whether you choose treasury securities, fixed annuities, or a high-yield savings account, each of these low-risk investments offers peace of mind and steady returns over time. Which low-risk investment are you planning to try first? Let me know in the comments below. If you found this video helpful, make sure to like, share, and subscribe for more tips on smart investing and growing your wealth securely. Thanks for watching, and I'll see you in the next video.